Hey everyone, welcome to my channel. It looks like we've achieved the soft landing with the data dump that occurred on Thursday. It started out with the PPI early in the week coming out better than expected. Then the CPI came out and it was as expected, the Consumer Price Index, which was a big deal. And the danger with the CPI, what we were worried about is that it would come in too low and signal deflation, which would indicate a recession is coming. But it didn't. It met expectations and no sign of recession in those numbers. And then Friday just absolutely blew our minds. The retail sales. Retail sales were expected to increase by 0.4% for the month, and they increased by a full 1%. Just totally unexpected. And then the joblessness claims were reduced. We were worried about the unemployment taking off, and it doesn't look like it's going to take off. Usually one of the main indicators that a recession is coming your way. We also got Walmart earnings. Walmart's earnings beat on both revenue and on earnings, and they had a good outlook. And then Applied Materials came out with their earnings after the market on Thursday. They beat on both revenue and earnings. Things look like it's a soft landing. It's time to get out there and invest. I bought some QQQ. I traded TQQQ. I also bought some Applied Materials. Things look so positive. I had to buy 1,000 shares of Nvidia because their earnings come out on August 21st. And their earnings should be good because all these companies report that they're spending lots of money on buying their chips. Consumer spending jumped in July as retail sales were up 1%, much better than expected. Advanced retail sales accelerated 1% on the month, much better than the 0.3 estimate. In other economic news, weekly jobless claims totaled 227,000, a decrease of 7,000 from the previous week and lower than the estimate for 35,000. The reports came the same week as data showing that inflation eased slightly in July. I'm showing you this news release, and it's for the year from last August to this August, and just to show you that the critical line in the sand is 250,000. As long as we stay below 250,000 joblessness claims, we should be okay. Walmart says prices are coming down, except in one key area. Walmart said inflation was flat in its latest quarter, and revenue growth came from selling more items and drawing more visits to its stores and website, rather than higher prices. Yet prices have remained high in some parts of the store, such as dry groceries and processed foods. Prices at consumer brands, including Walmart, have faced more scrutiny from both consumers and politicians. Here's the inflation breakdown for July 2024 in one chart. The Consumer Price Index rose 2.9% in July 2024 from a year earlier, according to the U.S. Bureau of Labor Statistics. That was the lowest reading since March of 2021. Inflation for consumer staples has eased considerably, economists said. And here we have the promised chart of inflation. This is the CPI. The dark blue line is the headline CPI number, and the dotted line is the core CPI number. As you can see, it reached as high as 9%. We all know it's worse than that, but these are official figures. In the middle of 2022, it hit 9%, but it's come down to 2.9% officially. And that is really quite an accomplishment. Jerome Powell must be very proud of himself right now. And the core inflation has come down significantly too. The core inflation includes everything but food and energy, just the things you need to live. Wholesale inflation, which is the PPI, measure rose 0.1% in July, less than expected. The Producer Price Index, a measure of wholesale inflation, increased 0.1% on the month, less than the 0.2% forecast. PPI, excluding food and energy, was flat. On a year-over-year basis, headline PPI rose 2.2%, a sharp drop from the 2.7 reading in June. That reading was so so low that we were worried about recession if the CPI came in low or negative. We would have been more worried about recession. So literally everything is coming up roses, and that low PPI predicts that inflation is going to stay down. But want to keep watching the job numbers, and we will. I think there's enough of positive data here that we're going to get a quarter of a point for sure. It'll be a quarter of a point. It will not be a half point. It's simply because this data is too good for a half point. It removes the urgency that, hey, we're falling into recession. It looks like we're hanging in there. I think Powell, if he's going to execute the perfect soft landing, he does a quarter point at each meeting to gradually bring it down, which will help with the debt of the United States. Right now, we're paying over $800 billion in interest on the national debt. Reducing these interest costs helps the national debt by reducing it quite a bit. I decided that it was time to invest and hold for a while, and I bought QQQ, which is an ETF of the 100 largest companies in the NASDAQ. Looking at the chart of QQQ, the 100 largest companies on the NASDAQ, you can see that it was a very good week. And what I've been doing is I've been trading the TQQQ, which is the triple leverage bullish fund on the QQQ. You know, I was trading and I was making money on the TQQQ, but after Thursday's data dump, where we had all this positive data, I said, you know, it looks like it's just going to keep going up. So I decided to buy the basic fund itself, and I bought 1,000 shares of QQQ at around 470. I plan to just leave that and then to trade TQQQ on a daily basis. There'll be days that I don't trade it. I'm only going to do TQQQ when it looks bullish to me. But you can see it went up very nicely. That's the 50-day and the 200-day average of the lines you see on the chart. And of course, it's above both of those. And it went up almost 5.9% for the last 5 days. And its relative strength is 57, which means it's not overbought at all. I think we have some steady upside going here. And as long as it does not look like we're going into recession, these rate cuts should propel stocks forward, or at least they won't go down so much. As long as they're cutting rates and there is no recession, that is positive. It's when they're cutting rates because there's a recession coming that cutting rates is negative. I was happy to be able to buy Nvidia because its chart took a spike up this week. It went up over 17% in 5 days. You know, it's good to own this stock before their earnings. I think has to be positive just because all these other companies are buying their chips and they cite that as one of their major expenses. And as you can see, it's above its 50-day and 200-day moving average, and it has a relative strength of 59. I think the way things are going positively, and then when they report earnings on August 21st, I think the stock market should keep going up. I bought 200 shares of a stock that I've traded for years, and I should say for decades. Applied Materials. I bought it at about $209 in the aftermarket. It reported earnings in the aftermarket, and it slightly beat on both revenue and on earnings, and it still went down to 206. Well, before the day started on Thursday, it was down to $201, and it went up 10 points during the day. So I think a little bit of that is it went up too much for one day and is burning some of that off. But I think 209 is a reasonable price, and I expect it to go up. Its relative strength is 56, which is okay, and it's above both its 50-day and its 200-day moving average, as you can see from the chart. And it had a very good week. So I just think the momentum in the price movement and just the general trend of the market, I'm returning to an old friend. So I've become optimistic on the stock market just because the data is just driving such a positive picture. Thanks for listening and watching.